Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 7th, 2025, and we're diving into Delek US's third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Delek US has certainly delivered a robust performance this quarter, and I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the financial highlights. Delek US reported a net income of $178 million and an adjusted earnings per share of $7.13, significantly surpassing the forecasted 14-cent. John, what drove this impressive performance?
Indeed, the results are remarkable. The key driver was the substantial benefit from small refinery exemptions granted by the EPA, which reduced costs significantly. This, combined with a strong refining margin and operational efficiencies, boosted their adjusted EBITDA to $759.6 million.
And how did the revenue figures stack up?
Delek US reported net revenues of $2.887 billion. While this is a slight decrease from the previous year, the focus on cost management and strategic exemptions has more than compensated for the revenue dip, leading to a strong bottom line.
Operational efficiencies and future outlook. Delek US has been focusing on operational efficiencies. Can you tell us more about their enterprise optimization plan and its impact?
Absolutely. The enterprise optimization plan has been pivotal, increasing the annual run rate cash flow improvements to at least $180 million. This quarter alone, they recognized $60 million in improvements. Additionally, Delek Logistics is on track to meet the upper end of its EBITDA guidance, which is now set between $500 and $520 million.
They also announced a stock buyback and a dividend. What does this indicate about their financial health?
These actions reflect strong confidence in their financial stability and future cash flow generation. The $15 million stock buyback and the regular quarterly dividend of $2.55 per share are clear signals of their commitment to returning value to shareholders.
Refining and logistics segments performance. Let's delve into the segment performances. How did the refining and logistics segments fare this quarter?
The refining segment saw a massive jump in adjusted EBITDA to $696.9 million, up from just $10.2 million last year, largely due to favorable crack spreads and inventory impacts. The logistics segment also performed well, with an adjusted EBITDA of $131.5 million, benefiting from strategic acquisitions and increased wholesale margins.
And what role did market conditions play in these results?
Market conditions were favorable, with benchmark crack spreads up by an average of 46.8% from last year. This significantly boosted the refining margins, while strategic inventory management added another $67.5 million to their bottom line.
CEO's vision and strategic initiatives. CEO Avigal Soreq has outlined some strategic priorities. Can you elaborate on these?
Certainly. CEO Avigal Soreq emphasized their commitment to safe and reliable operations, improving cash flow, and delivering shareholder value. They are also focused on unlocking the full value of their midstream assets, particularly in the Permian Basin, which is a key growth area for them.
How does this align with their long-term goals?
These initiatives are aligned with their sum-of-the-parts strategy, aiming to enhance profitability and financial flexibility. By strengthening their position in the Permian Basin and optimizing their midstream operations, Delek US is well-positioned for sustainable growth.
Key takeaways. In summary, Delek US has delivered a stellar performance this quarter, with significant earnings and cash flow improvements. Their strategic initiatives and operational efficiencies are clearly paying off. John, any final thoughts on their investment prospects?
Delek US is demonstrating strong financial health and strategic foresight. With their focus on operational excellence and shareholder returns, they present a compelling investment opportunity, especially for those looking at the energy sector.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Delek US's performance in the comments below.